thanks. And welcome everyone to today's panel discussion. My name is Prashant Sareen. I'm a partner with Bain & Company and your moderator for today's panel discussion on the economic value of sustainability. With increasing regulatory, investor, and customer pressure, awareness and agency on ESG and the environment in particular, expectations for corporates expectedly are on the rise. The need of the hour is for companies to walk the talk, to go beyond addressing the issue, to take real actions, in particular, adopt sustainable practices, not just for themselves, but across their entire value chain. We believe that this can be characterized along two axes. The first one is around risk mitigation or value preservation. The second, new opportunities, new industries that are being created every day, every hour at this point, as these disruptions really take place and lead to value creation. However, this won't happen by itself, and there will need to be significant investment that takes place along both of these axes of value preservation and value creation. Despite the enthusiasm and the actions post COP26 in Glasgow, we know for many corporates there remains a long way to go. For instance, in the US, until recently, only 1 in 4 S&P 500 companies failed to disclose significant oversight on ESG, and only 7% codified it as a full board responsibility. We also know that the recent events with the Russia-Ukraine crisis are having a mixed impact, with longer-term move around thinking about energy independence and green renewables, particularly on the European continent, but also the near-term impacts of reviving perhaps many legacy fossil fuel assets in order to mitigate the short-term rise in price in oil and gas. India, of course, represents a fascinating case as always, and we do have a lot more to do across many metrics of environmental sustainability. However, we've at the same time witnessed the fastest growth in renewable energy capacity amongst all large economies, with a slew of investments coming in, powered by regulation, utility scale economics, and investor interest. Finally, with India's fast growth and transition to net zero over time, there will be the opportunity to create over 50 million jobs, $1 trillion in economic value by 2030, and perhaps as much as $15 trillion by 2070. With this context, I'm delighted to introduce you to our distinguished panel today, different stakeholders who represent and embody different voices. First, Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas, one of India's most eminent corporate lawyers. Mukund Rajan, Chairman eCube Investment Advisors and co-author of the recently launched Outlast, How ESG Can Benefit Your Business. And Anirban Ghosh, Chief Sustainability Officer of the Mahindra Group and one of corporate India's leading voices on sustainability. Welcome. With that, maybe Cyril, I'll love to pull you into the conversation, get you to kick things off. Any opening comments from your side on this topic around sustainability, and particularly as we dive deeper today on environmental sustainability?
So Prashant, firstly, thank you for having me here. And I echo a lot of what you said in your introductory remarks. So as I see it as a corporate practitioner, that there is a significant awareness of ESG themes. What till a few years ago was essentially the corporate governance theme dominating it on a standalone basis, the G aspect of ESG has now evolved and effectively upgraded itself to a broader ESG conversation. Now, apart from the markets where investors, customers, and even debt providers have a say, there has also been sort of a regulatory push on this for quite some time. The first basic push started in the 2013 Companies Act on effectively moving us to a stakeholder model of governance, where we decisively as a nation moved away from a purely shareholder model of governance to a stakeholder model of governance by adopting Section 166, which kind of legislatively mandated that the board responsibility is to all stakeholders and not merely to the shareholders. At a public markets level, And at a sort of Ministry of Corporate Affairs level, there have been many iterations, but the most recent one is the BRSR, which is 11 days old in terms of its mandatory applicability, which essentially puts a reporting obligation, sustainability reporting obligation on the top 1,000 companies by market cap. And it's a very nuanced, fairly detailed and well-considered document, which I think is certainly going to change the paradigm on disclosures. Ironically enough, I think we are also seeing movement from the judiciary. So in 2021, we saw the Supreme Court actually intervene and interpret Section 166 to make it a kind of a board obligation and a kind of a mandatory thing rather than just a good to have fuzzy wuzzy thing as well. So it is, these things actually come and take effect only when they are enforceable. And I think the judiciary has started to play ball as well. A lot of work still to be done. We're also seeing new regulations come in, whether it is RBI evolving policies for green finance, what we are seeing in terms of thinking in relation to a new battery swap policy. And, this all work in progress. But these are a more broader regulatory and policy initiatives which are work in progress. And I think they're going to have a deep impact. The COP26 commitments, while 2070 may seem far, and it is far, the fact that we have promised 50% by 2030 is just 8 years round the corner, and that is quite quick. It's not insignificant at all, and that's a huge energy transition which needs to be made. Before I conclude my opening remarks, I just like to sort of make a few comments about the S aspect, the social aspect of ESG as well. So it's largely been the governance and G aspect which has dominated the conversations. E and climate have now started in the last couple of years to be the dominant theme. So we should not forget S, and it should not remain too far behind. And I don't know whether you picked up this a couple of days ago. One of the judges of the Supreme Court actually made a remark that the S aspect of ESG needs a lot of consideration. There is going to be a lot of judicial interpretation over there because several segments of the labor force in the new economy, so to speak, are completely unprotected. So I think we're going to see both regulatory as well as a judicial push on the S aspect as well. And I think it's important that all three, even if they can't move in complete tandem, should move generally at a similar pace. So I'll reserve my further comments for the Q&A, but I thought this as a opening sort of both legal/policy setting by me should be okay.
No, thanks, Cyril, and thanks for sharing some of the regulatory backdrop and the fast changes that have been taking place. I think 2 points in particular resonate. One is this notion of citizenship that you highlight, as particularly as the Supreme Court is taking this view, not just shareholders but stakeholders, which is a much more expansive view. And perhaps linked to that also is this notion of disproportionate equity or equality, particularly as we think about the underprivileged. And you think about some of the changes, especially the environmental changes that are causing significant challenges in natural habitats around the world. And as we see some of the challenges, even in Delhi, with temperatures far in excess of what you would expect in early April, those impacts will be felt much more by the underprivileged. And thinking about that is also quite critical. Anirban, opening comments from your side?
Every time I hear a new way of looking at this subject of sustainability, like the one you shared, value preservation, value creation, I tend to go back to the sustainability definition that we use in the Mahindra Group to see, hey, have we thought about it at all? So let me first share the definition that we use. It is about building enduring business by rejuvenating the environment and enabling stakeholders to rise. It appears to me that aspects of value preservation and value creation are probably embedded here. When it comes to value preservation, which was your first area that you wanted to explore, Prashant. To my mind, there are three things that corporations do. One, of course, is compliance. Second is risk mitigation. And because of the impacts of climate change, there is the area of adaptation, which is very, very crucial. So if we were to ensure that the organization at least complies to all climate-related regulation, manages climate-related risk, and does sufficient work in the adaptation space to make sure that all the risks that are happening because of climate change don't come and hit us very badly, we would have done reasonably well in value preservation. Now, the compliance bit is dealt with well thanks to the focus on governance, but at least by large organizations. The climate risk piece, I think clarity on that is only just emerging. I don't know how many organizations have figured out the different kinds of risk, either new or accentuated, that they are likely to face because of climate change. And these changes are going to be very, very large. Just to take one example, every time we have a monsoon which is not well spread out, and maybe doesn't reach the northwestern parts of our country where most of our food is grown, we are, comfortable knowing that the melting glaciers and perennial rivers will make sure that water will continue to be available. So a bad monsoon in the northwestern part of our country has not had a very bad effect on crop production. However, with climate change, if the glaciers start receding, then the availability of water would start becoming a very big question, and we could face a food security situation going forward. Now, how that can then snowball into various kinds of risks for different businesses across the country is something that we need to look at in far greater detail. So compliance, yes, understanding risks, clarity has to increase a lot more. Adaptation, I don't think we've even started. Because if we don't understand the risks well enough, I don't know what adaptation actions we are going to take. And if you were to ask anybody, okay, so what are the adaptation actions required? I guess we'll first start with flooding, but we'll have to go way beyond that because productivity decreases thanks to increasing temperature is going to hurt industries like construction, agriculture, and any other industry where you have a lot of workers working outside and not in air-conditioned offices. In fact, the effect of increased air conditioning on climate change we are all aware about, and that too can have another cycle of risks and the need to mitigate and the need to adapt. So let me conclude right now by saying that an approach to building an enduring business by rejuvenating the environment and enabling stakeholders to rise could address both issues of value preservation and value creation. While compliance is something that larger organizations are doing well and can be expected to do well because of their focus on governance, we've only just got started on understanding climate risks to business, and we need to get started on adaptation actions to make sure that we don't get hit by climate risks.
Thanks, Anirban. And I loved your laying out of the three elements: compliance, risk mitigation, and adaptation, and just focusing and walking us through how different companies are thinking through them. A lot more to be done on adaptation for sure. Mukund, turning over to you, opening remarks from your side.
Sure. Thanks so much, Prashant. You mentioned my book, Outlast, and the reason we gave it that title is my co-author and I felt that really Indian businesses today are at a very early stage of their evolution on the ESG curve. And yet the ones that are far-seeing are doing a lot about this, including Anirban's group, for instance. And those are likely to be the ones that will outperform the competition and indeed outlast for the future. We also make the assertion in the book that really the kind of focus that ESG and sustainability is now getting in India I think requires that businesses across the spectrum give it the same kind of attention, which was perhaps given in 1991 when economic reforms and liberalization were introduced in this country. And I think it's critical that Indian businesses understand the kinds of expectations that stakeholders have both in India and overseas, and will have increasingly in the future with much higher standards expected. Now, I've just come from a weekend conference with a bunch of private equity and venture capital firms and some companies that are represented there. And I think the conversations there clearly confirm this view that we are still at a very early stage of evolution in India in terms of the way we think about sustainability and ESG, and especially when you compare it with perhaps what is taking place in markets like the European Union and now increasingly the United States. Cyril talked about a number of pressures that are beginning to come in India from the regulators, from the government, and indeed incentives. Think about the PLI program, the FAME scheme, faster adoption of manufacturing and hybrid and electric vehicles and so on. The judiciary is taking a strong look at sustainability issues and deciding questions on behalf of the public interest and civil society, and of course, customers, including Gen Z. But still, I think all of this tantamounts to relatively less sort of pressure on Indian businesses to change faster. Currently, my sense, and this is a personal view, of course, is that a lot more of the pressure at this point of time is coming really from overseas stakeholders, in particular foreign investors and foreign multinationals, of which Indian companies form part of the supply chain. And these companies are now being asked to adhere to high standards that are relevant perhaps in overseas markets. But for Indian businesses, I think in the Indian market, perhaps with the exception of large companies like the Mahindras, for instance, and perhaps companies that have a strong export footprint and therefore are aware of trends overseas, the large percentage of businesses across India, I think, are still relatively low in their awareness of how quickly this landscape is changing in other parts of the world and how important ESG and sustainability will be to their future success. Another phenomenon one tends to see is that for many companies, really they equate doing better on sustainability with doing better simply on environmental compliance. And I think the S and the G tend to be given less importance sometimes. And within environment, again, it often boils down to a question of cost. Especially if you come from a manufacturing background, then what is it going to take in terms of capital allocation for me to do better on my environmental compliance? And if there is a way one can avoid it or delay it, that tends to be the preferred strategy just now. Particularly in the light of COVID and other pressures that companies are facing, there is an effort to try and keep costs down as much as possible and a reluctance to allocate capital towards doing better in ESG right now. But I think that's beginning to change with some of the forward-looking companies. But just now, I'd say it's a little bit of a mixed picture in India, and I think businesses on the whole have a long way to go.
Thanks, Mukund. You resonate a lot with what you said. I think two elements in particular that stand out for me. One is this notion, you talked about the importance of ESG and sustainability similar to the reforms that took place in 91, 92. I almost feel like the language and the vocabulary is similar to the way we think about financial metrics, the robustness of financial metrics used today, the scrutiny and the legality of it. A lot of that needs to come to the ESG domain as well, with the same metrics, the same rigor, the same transparency and analyses, especially given the link to long-lasting, enduring organizations. And that piece resonates a lot, as well as you mentioned a weekend conference with private equity investors. In our work with private equity investors, we're seeing more and more of them double down and do an ESG diligence as well, in addition to a lot of the other diligences they earlier did on the asset. Again, with this notion of making sure that when you take an equity position, that when you exit, you take an equity position in a company that not only is going to last and be robust from a financial perspective, but also an ESG perspective, because that's going to be so important to getting a higher exit multiple. I did want to come back to each one of you on these themes of around value preservation, around risk mitigation. And I'll pull in from the comments that you had. Anirban, I'll come first to you. You spoke through the Mahindra Group's philosophy, and thanks for that. It's very eloquent. And I'd love to get your thoughts on one or two key initiatives that you've launched from an environmental perspective that you think will have a real impact going forward.
Prashant, the first thing that we started on was deep decarbonization. It was possible to get that started. Technologies were available, and it was addressing the biggest problem that was facing the earth from an E perspective, and that is, reduction of emissions. Luckily, the deep decarbonization solutions were actually great for business from a cost reduction point of view, and so we were able to scale. An investment of upwards of 250 crores over the last 5 or 6 years has created an annuity savings stream of 145 crores per year.
Wow.
Numbers like this, financial people love. So the question is not balance of sustainability and business. It is how much more of this can we do? And this is actually the reason why I believe that we will find many solutions, because and we will be able to address the climate issue, because a lot of the technologies are economically viable. So deep decarbonization includes energy efficiency work and renewable energy work in broad terms, and that's self-explanatory in itself. But that's not the only thing that we knew we had to do. We looked at what are the ways in which a business needs natural resources to do business, and how do you ensure that you don't have a negative impact? In short, how do you try and become planet positive? So one important area is the use of water and the discharge of effluents. So the group decided that it wanted to be water positive, and discovered that being water positive through community water harnessing is not very difficult at all. But if you were to have a water shortage at a factory location, it may not be of much help. So we've worked very hard on increasing water productivity, a term that is not very common. And as a result of that, there are locations in the group today that don't need to access water from the municipality for more than 200 days of the year. We will try and maximize this to the extent possible at whichever location is possible. Recycling of water has already reached 45-50% levels at our factories, and we are looking to reduce the freshwater intake through tankers at each one of our resorts and make them greener as we go forward. One way in which businesses actually harm the environment is the way in which wastes are disposed of, even if you are following the rules of the Pollution Control Board. So we've taken a program on which is very simply ensure no waste to landfill. When we started the program, I'm not sure we knew what to do, but over time we've discovered that there are ways to reuse, repurpose, and ensure that the waste does not reach landfill. 25 of our locations are now certified as being zero waste to landfill, including the integrated city that we have in Chennai. And lastly, we recognize that whatever you do, there will be some emissions that you will cause, and there will be some pollution that you will cause. So we've got a program to promote biodiversity and help nature help ourselves. There are 20 million trees that are growing right now, planted by the Mahindra Group. The run rate is about 1 million odd trees per year, and we are looking forward to scale it up to 5 million trees per year by 2026. So these are some of the initiatives. Okay, so while I'm telling you trees, it sounds simple enough, but if you plant 15 million trees in a particular area, the ecosystem it creates for flora and fauna is something that I don't think as human beings we'll ever be able to create ourselves. So that's why we call this work in biodiversity as helping nature help herself. So these are some of the initiatives we've taken up. There are many more, but broadly, these are the four big ones that have very high impact in taking us towards becoming planet positive.
Anirban, thanks for that really impressive set of initiatives. And I love the last one on promoting biodiversity. And of course, the impact it'll have from a greenhouse gas emission perspective and acting as a carbon sink. So, Cyril, I wanted to come to you, and you talked about BRSR. We're in the first 11 days. How do you envisage from your conversations with chairmen and CEOs across the corporate landscape, how do you envisage the impact of BRSR? And as we move from voluntary disclosure now to mandatory disclosure, the top 1,000 publicly listed companies in India, what do you think will happen, and what more needs to happen in order for us to realize the vision that perhaps Anirban was painting for us?
So on a lighter note, not all chairmen and CEOs know about the fact that this rule has come in. It's the chief sustainability officers and the secretarial and finance departments who kind of keep track of this, because they are facing the stock exchanges and others. So I've had occasions speaking to some chairmen and CEOs, and they said, like, what is BRSR? But hopefully that phase will go soon, because I think the independent directors on the board are also going to be asking this question at board meetings. So the big risk I see on BRSR at the moment, though I think it will change, is that it can become just a tick the box operation. And that's how a lot of consultants are also selling the story about, we'll do this for you for 5 lakhs and 6 lakhs, and others where they'll send a questionnaire, somebody will tick 15 boxes, and that's the end of it. So there is a risk that it becomes a part of a compliance function. But the real story on this is that it is actually a strategic function. It needs to be forcing boards and managements to think about ESG from a more strategic mainstream perspective. And many groups have done that. I find that in some groups, the sustainability officer or the ESG person is actually sitting in the chairman's office, or is sitting in the strategy office. So those folks have understood the difference and have kind of are dealing with it for what is really supposed to be. So from a risk point of view, I think there are 2 or 3 things. One risk, I think, is, and I think both Mukund and Anirban talked about it, is a risk of missing the bus. So if you don't catch this theme and you just think about, I'll just, fool around with a little bit of engineering and come in compliance, and I'll make some disclosures and all of that, the big risk that you run is that you may miss the entire opportunity of reinventing yourselves and find out that 5 or 10 years from now you become irrelevant. I think that is actually the biggest risk. The second is a kind of more short-term, more here and now thing, which is of legal liability, whether it is something which arises out of the disclosures that you made, or some NGT order that you violated, or some Air Act, Water Act permission that you have not complied with, and those kind of which are more here and now. They are easier to get your kind of hands around, but the embedded long-term risk is of climate action. We are seeing this happen in Europe. I mean, we've all been following the Shell story. We've been following stories in the United States, thanks to effectively class actions based on activist investors as well. Those are, I think, the medium term, and there can be real liability. Now, India doesn't have, in a meaningful way, class actions, but I actually think that we are one judicial innovation away from it. It just takes one activist judge in the Supreme Court to just sort of stretch the boundaries a little bit, and that will open a floodgate of climate litigation, especially since the foundation has been laid in Section 166 of the Companies Act, and there is some sort of a climate act, a class action framework in the Companies Act. So it's kind of the forest is dry and it's not being one match to light it. And I think that is, I mean, again, I was not using a climate analogy.
No pun intended.
Yeah, no pun intended. So that's where I see this. So, directors sitting on the board, and especially independent directors on the board should be asking piercing questions on this. And they have started. To be fair, I think they have started asking this, and the curve, the knowledge curve and awareness curve is rising sharply. It's not 100%, but it's rising.
So, Cyril, thanks for that. I think the notion both of irrelevance, which is what Mukund alluded to in the beginning of building a truly enduring company, but I think there's a little bit of this shorter term push around, legal liability, both acting in concert, I think will make a real difference. But let me pull a little bit more on that vein, Mukund. And you highlighted where India was on the spectrum and mentioned that, in effect, as you've looked at a number of different metrics, there is the beginnings, but clearly a lot more to do and a real journey that we need to traverse. And as you compare India today versus a number of other developed economies, and you're seeing the speed of change that clearly is now accelerating, what conditions would you ascribe need to be fulfilled in India for us to also increase our acceleration to the same pace? In effect, we could leapfrog. There's no reason why we couldn't leapfrog on sustainability the same way we've leapfrogged, for instance, in digital public infrastructure. What conditions do you think are required for success over here?
Sure, I think it's a terrific question, Prashant. So given that we are still very much in the early stages of this whole story in India, I think the ecosystem you need to ensure that we make rapid progress also is just beginning to come together. But the good news is once most of the parts are in place, then it is something that can evolve very quickly. As Cyril said on the judiciary, for instance, you're just one judgment away perhaps from stoking some of these fires. So if I had to think about it, I'd probably put my finger on maybe three sort of sets of important issues. The first, I think, is related to policy. What you do need in this country is, I think, long-term policy and consistency of policy. And once businesses have a sense of what's coming down the pipe, I think they then start taking the actions to be responsive. So when I talk about long-term policy, you probably need, for instance, Anirban talked about decarbonization of the Mahindra Group. I think we need a decarbonization policy for India for the next 20 to 30 years today, so that businesses know what to anticipate 5 years down the line, 10 years down the line, 20 years down the line, and can start preparing for that. You need consistency of that policy. So what you can't have is something we've unfortunately seen too much of in India. For instance, governments, even at the provincial or state levels, changing the rules of the game, changing tariffs, for instance, on renewable energy, things of that nature. That's simply not on. You can't plan for a long-term future if you're going to have periodic short-term shifts in policy. On the sort of dimensions of how policy can be successful, the carrot and the stick, I think we talked about some of the carrots that are now coming in, the PLI schemes, things of that nature. And I think we need more of those kinds of incentives to push the sustainability agenda. So green procurement, for instance, in government policy, perhaps more of sustainable lending that forms part of the Reserve Bank of India's priority sector lending definitions and things of that nature. But you also need the stick. You need to enforce compliance more strongly. You need to create a compliance costs. The BRSR, as Cyril mentioned, could turn out to be initially just a tick the box exercise. There aren't necessarily major consequences for greenwashing or poor or inauthentic reportage just now. But I'm sure they'll come. But you will need that to force the pace of change. So I think there are a bunch of issues around the policy dimensions that are going to be very important. Then there are the enablers. And I think the biggest enabler perhaps is going to be finance. Last year before Glasgow, there were studies that suggested that India's requirement to even comply with its earlier Paris Climate Treaty related targets were going to be of the order of $170 to $180 billion a year for the rest of this decade. And currently the flows that are taking place are $17 to $18 billion. So just around 10% of what we need. So I think on the finance and financing of change in India, there's got to be a step change in solutions that are available and market intermediaries who can channelize capital towards the right kinds of causes. And I think the financial system is going to have to see much greater flexibility and innovation to provide some of the requirements. And finally, I think skills development. This whole ecosystem is going to need specialized skills across a range of areas and across the kinds of services that are required, from assessment of climate change, trained personnel who can offer commentary on sustainability products. I think there's going to be a need for much more talent that is available to really push the envelope on what corporate India and Indian businesses can do. In the past, sustainability, unfortunately, tended in many organizations to be a sort of fringe function, if at all it existed in those companies, sometimes getting coupled with spaces like CSR, for instance, or even administration in some companies. I think that's got to change now. And as we noted a little while back, the best companies are now beginning to see it getting integrated with the strategy function, on even at the level of the chairman's office. But we'll need much more talent coming into the space to ensure that the landscape really does change speedily.
Mukund, really interesting thoughts, and as you walk through policy and what's required from a carrot and stick perspective, but also a number of the key enablers. I think one of the data points that stuck is this India, $170, $180 billion. And if only 10% of the flows are going in today, imagine the value creation opportunity as more and more funding comes in that will be driven by financial investors, but I think increasingly driven by aware customers, regulators that are perhaps a little more activist, but also employees where the best talent wants to work for purpose-led, mission-focused companies. And so I wanted to turn the nature of our conversation a little bit to the value creation side. With many forces coming in, disruption coming in, this is going to create significant opportunity. Anirban, maybe first for you, sustainability, many would say, is the next digital. What commercial opportunities do you envisage for Mahindra, both in India, for your businesses here and around the world, especially at the intersection of sustainability and digital?
Great question, Prashant. But before I try answering that question, let me reinforce something that Cyril said a little while earlier, which is the risk of existence to business is probably the biggest risk. And I'm choosing to reinforce this now because as you talk about commercial opportunities, this is the risk that comes into play. Because as newer technologies evolve, existing businesses need to embrace newer technologies to remain competitive. Imagine an automobile company not having an electric portfolio 10 years from now. Imagine a steel company not having green steel, say 20 years from now, 10 maybe a little bit too short. Imagine similarly a cement company, chemicals company, aviation, shipping, not embracing clean technologies. What sort of a situation would they be in the future? When I look at digital, to my mind, digital opens transformation opportunities in products and services. There are a lot of solutions which are there in the overlapping area between planet and profit. We've already seen the product portfolio of electrical appliance companies to have completely morphed. I don't think we've been noticing how that portfolio of products has changed. LED lights is famous, but the same things happen to fans and air conditioners and anything else that you name. In fact, the new fans that are, I think the first advertisement came out yesterday in the newspaper for BLDC fans. They save 60 to 65% power. And very soon, none of us will have the conventional fans in our house at all. And in every one of them, digital technology is playing a very big part. Software is a part of the solution. So much so that today you can talk to your lights and talk to your fans and talk to your air conditioners and get them to get going. My father's car had no software code in it. By 2010, the cars had about 10 million lines of code, helping improve fuel combustion in the main. Today, this has reached 125 million lines of code and is expected to reach 500 million lines of code in fully autonomous vehicles. Compare this with 15 million lines in an Android phone. You are getting as much code in an Android phone free along with your car. This is the way digital technology will transform products and services going forward. Conventional software solutions are already catalyzing lower emissions in every industry by simply taking enterprise solutions to the cloud. And this is one task that all IT companies, including Tech Mahindra, are doing at scale. These are many ways in which technology, digital technology, software code will catalyze solutions and make them far more effective. In a building, if all the hardware can improve energy efficiency by 30 to 40%. But if you were to add IoT and various kinds of software which does further optimization, that increase goes from 30 to 40 to almost 50 to 60%. So that's why we believe that digital technology can be transformative and can act as a force multiplier.
Thanks, Anirban. Thanks a ton for walking through a number of those elements. I had no idea about the number of lines of code in cars. So clearly a lot of change happening very, very quickly.
I will credit that to you, Prashant. It is your question that triggered that little bit of research.
Thank you. Mukund, turning over to you, we talked about limited regulation on ESG in India historically, and this notion of companies focusing, as Anirban highlighted, on risk mitigation for the first part, or compliance and risk mitigation for the first two parts. Many new ESG specific funds are being launched in India around the world, really with this focus on disruptive new business models, which will create new sources of value, both in public markets and private markets. And I'm sure as a private equity investor yourself, you're looking on, you're constantly on the lookout for new opportunities that might emerge. Which sectors do you think are best placed to see the most disruption, the greatest value creation in India?
Again, I think from a disruption perspective, I would tend to suggest that, on issues of S and G from an ESG perspective, honestly, there's not too much to choose across corporate India. I think many Indian companies have a long way to go in improving their performance on both S and G. And I think particularly on S, an issue like gender diversity at the workforce across the corporate sector, large and small, I think there's just so much that needs to be done. India's female labor force participation at around 20%, according to World Bank statistics, is much less than the global average of 48. So it's much more that needs to be done there. But on the E dimension, I think there are very interesting possibilities that are playing out. Firstly, on the disruption side, I think there are so many sectors that are going to be standing at risk of striding stranded assets in a few years' time that no investor wants to back. Think about the oil and gas sector, think about thermal power, think about automobiles in the ICE internal combustion engine space. As the shift to electric vehicles happens, I think there'll be many of these companies and their component suppliers who are going to be left with businesses that could potentially be struggling if they've not made the decision to pivot or to expand their business framework to do other things to continue to ensure that they're able to earn income and keep the revenue going. I think there are a number of other spaces that again get impacted by climate. Think about metals, the hard to abate sectors like steel, think about construction materials, including cement. I think all of these will see a lot of innovation take place, but also challenges from new age companies that are trying to substitute what some of these companies can offer or do. There will be sectors that support a lot of the transition that is already taking place. I think telecoms and IT, for instance, are going to be great beneficiaries of the fact that, in a sense, geography is now history. The fact that we're doing these kinds of video conferences using these kinds of technologies and reducing our own personal carbon footprint, no longer traveling for meetings, all of that makes a big difference. But I think the most exciting part of what we see in the market now is a lot of the new startup activity. around new opportunities that are opening up. So on the one side, we had disruption, and there are penalties and costs for companies that don't pivot away from problem areas. But equally, there are a huge number of new opportunities that are opening up. We talked about one of the big enablers for a better ecosystem in India being skills, for instance, and services. I think you're going to see a number of new services, data analytics that are going to come up that are going to be very important for companies to be able to measure and track their ESG performance. You're seeing companies that offer satellite-based services looking at remote sensing data and offering you a sense of what your environmental footprint really is as a company. New materials that are coming up, alternatives to meat, plant-based alternatives. So I think a whole bunch of new industries that are beginning to be seeded. And I think Startup India in that sense is doing some great work in establishing new propositions that I think investors are going to be very, very excited about across agriculture, across natural resources. And as I said, in some cases, offering new competition to traditional industries, including all that you're seeing in the electric vehicle ecosystem, challenging conventional transportation. So lots of excitement, but also I think the need to worry if you are an established company with potential risks of stranded assets for the future.
And Mukund, if I had to put you on the spot and ask you to make a bold prediction about how many years before we see our first climate tech or sustainability-based unicorn in India, how long would you say? Is it 5 years away? Is it the end of the decade? One number, just to put you on the spot.
I'd say in the next 3 years, you will probably see a unicorn which has a strong climate proposition to offer the market.
Wow. So it's really round the corner in some instances.
Absolutely.
For startups.
And you might see it in a space like carbon credits trading, new sustainability products exchanges. I mean, there's a world of opportunity out there. Anything that has a sustainability quotient and can make a difference in people's lives is going to start attracting capital very soon.
Wow. Cyril, want to turn to you. As we've discussed, the potential of value creation across multiple sectors is very high. These shifts are creating winners and losers as we speak. Sectors like energy that have moved so quickly to renewables from fossil fuel-based power on the basis of regulation, investor and analyst expectations. What opportunities from your perspective do you see for business houses that capitalize on ESG quickly? And maybe is there any regulation that you would say the government should draft to accelerate this transition and help India emerge as a leader?
So a lot has been said by both Anirban and Mukund in terms of the opportunity. I think the startup space is going to be a very big sort of segment of the market where a lot of innovation will take place. But I see a lot of investment coming in, and therefore, in terms of the opportunities for attracting private equity, attracting strategic investments, and then eventually taking some of these companies to the market, I think you're going to see a lot in the financial markets because of the underlying technological change. But if I can step back a second, I think finally this is a lot about science and technology as well. And part of the reason why we are kind of perceived to be a little slow is because there is not enough impetus on encouraging fundamental research and science and technology as well. But I think that the approach of the government in terms of some of the announcements that we saw in the budgets is to put an increasing focus on just pure hard R&D and scientific research. And if that picks up, I think you see a lot of tremendous opportunities coming up. So we don't have very well organized research between centers of excellence, universities, and others. And if somehow the policymakers could figure out a way of connecting all of that, you'll see India become a big research center for the world. Because it's ultimately a lot of our scientists who go out there and they do so well. So the brain power exists, but the institutional architecture, I think, is missing. And the ability to incentivize fundamental scientific research. So I think research is going to be a big opportunity. Just thinking aloud, like if you can have PLI for kind of Make in India, why can't you have a PLI like thing for research in India as well? And every single thing that we discussed today is going to the bottom of it is going to be the ability to drive science and technology and research to make this possible. At the end of the day, this is all science. And the finance will follow, and finance and the markets will follow after that. So I see, we're just probably at the initial cusp of developments on this. Science will go very fast, and markets will follow. Is the way I see it. And you gave the example of renewables. We've seen, the kind of market capitalization that has been created so quickly in moving from fossil fuels to renewables. And the game has just started. The real stuff is going to happen when EVs come in, or when you have a lot of other ancillary industries, whether it's charging stations. I mean, I don't even know the science properly, but I can just imagine a whole arena of ancillary industries where the capital is going to chase it, because these are all virgin, and the opportunity for an upside is incredible. So I think it's opportunity.
Thanks, Cyril. And one of the data points that I found quite striking in an article by the New York Times recently is that $30 billion of VC money went into climate tech last year, especially in the US. In India last year, we know the total VC money across the ecosystem was about $35 billion. And you can imagine the opportunity if some of that money, many funds are already looking for those opportunities for disruptors, innovators, young students and engineers out there. There's a real opportunity to really build the next wave of sustainability-oriented unicorns, or to work in large companies to really drive some of that change. I'm being conscious of time, and so I did want to spend a few minutes quite specifically on India. And Mukund, perhaps I'll start with you. The sustainability field is quite nascent. And, not that and several of the Nifty 50, for instance, don't yet have a chief sustainability officer in place. And that I'm using more as a metaphor for the different kinds of talent that's required to achieve, and what the journey that enables on at Mahindra, or to create the kind of change that we're talking that startups need to have. It's like the software industry or the IT services industry. You just needed a lot of different people with skills and talents that came together to create the change that we've seen. What advice would you give to Indian startups and companies that are looking to embark on this journey, particularly from a talent perspective?
Sure. So I'd probably suggest at least three things. The first is, even if you're a startup, don't delay embracing an ESG agenda, and don't delay the idea of creating a locus of governance in your organization that keeps shining a light on this issue. Now, it doesn't mean you have to create a role or a designated position called Chief Sustainability Officer. It could be the CEO's responsibility. It could be a small ginger group in the management. It could be somebody at the board level who has an interest in the subject. But make sure that there is a discussion that starts. And it's very important to build this in, I think, right at the start. And if you think about sustainability across all the dimensions of ES and G, issues like corporate governance, I don't think brook any delay in terms of when you introduce best practices. I think if you can embed it right at the start, make it part of the culture, then it's much, much better for the organization and its future sustenance, as opposed to trying to do some retrofits later or trying to change the culture once it's already been set. And I think you're already seeing in the market these days a lot of headlines around startups where there have been controversies generated, perhaps because some of these issues didn't get the attention they deserve when the organization was being set up in the first place. So that's the first point I'd make, that the tone at the top, the governance is very, very important. Don't delay assigning responsibility for these issues to somebody there. The second is, you don't have to churn the ocean. And this is where this concept of materiality is important. Look at the few things that really matter to your business and its future success from a sustainability perspective, and focus on those to start with. There are ESG ratings providers who look at over 700 parameters, but the organization, if it's a startup, doesn't have to look at 700. Start with 3 or 4 that you think are going to make a big difference to your business. And really work on a roadmap and a plan for the future. Even when these days, there's a lot of talk about net zero in the context of climate change. But think about the targets companies are setting on net zero. Typically, they are 15 years out in time, 20 years out in time. So it's not that stakeholders are expecting you to have a plan that delivers an impact tomorrow, but they're expecting you to at least think about the future and have a plan that at least 10 years, 15 years from now delivers the impact that they might expect. So I think it's important to at least have the beginnings of a roadmap. Don't get daunted by the sense that this is a lot of work and is going to take up a lot of cost. Think about it as the beginnings of a journey, and you need to start that today.
Mukund, thanks. And I think my takeaway is don't think about sustainability as being an adjunct to your strategy, but think about really being, conjoined, weave it into your strategy to create disproportionate value. And I believe, as you've said, we've talked about technology driving higher multiples. I think sustainability plus technology could drive even higher multiples going forward. Anirban, to you, and relatively quickly, how can Indian companies work with the broader ecosystem in India to encourage and scale up solutions and on-the-ground initiatives? Are there interesting startups or not-for-profits, for instance, that you think companies could work with, which will drive significant impact over the next several years?
Prashant, a little earlier, you talked about leapfrogging in India. It seems to me that working with the broader ecosystem and startups is a way of leapfrogging. But then if you were to ask the question, what does leapfrogging really mean? Here's what comes to my mind. If we want to leapfrog, let's say, the West, then we will develop along a green path vis-a-vis decarbonize after development. That will give us a sustainable path of growth where our country will do well. The social issues will get taken care of. We will use the best possible technologies and always have a low carbon footprint in the path of our growth. There are 4 possible ways in which I can think of working with the ecosystem. One, of course, is decarbonizing your suppliers and value chain. Second, building decarbonizing solutions and go to business with them so that more people can decarbonize themselves. Third, invest in new clean solutions through startups. And fourth, even if you can't invest in them, provide living labs where prototypes can be developed and solutions can be built and for subsequent scaling in the marketplace. Within the Mahindra Group, we've worked with 350 plus suppliers to help decarbonize them. Our two biggest programs so far have been the LED program and the motor replacement program. We see the renewable energy program to be the next big lever to decarbonize suppliers. We've built 7 new businesses at least, which can be called green businesses. I will not list them all out in the interest of time. We've invested in a few startups in the area of shared mobility. Again, a climate solution for the future. And we are very keen to provide opportunity and space for startups to use our facilities as living labs. We've had 1 or 2 examples already. We're quite happy to enable the creation of new climate solutions, which will help all businesses be sustainable going forward. So these are the 4 ways in which we can think of working with the ecosystem. I don't know whether it's comprehensive or not, but at least 4 good ways of working with them.
Wonderful. Thanks, Anirban. And Cyril, I'll come to you for the last word. What opportunities, whether it's regulation or otherwise, do you think, the government or the broader Indian corporate ecosystem need to take to really help us drive leadership on the environment front? What needs to happen?
So sort of number of things. And I'm also conscious of the fact, and I think so is the policy establishment, that we are taking the presidency of the G20 next year. So I think there is an amazing opportunity for India to lead this conversation in a much broader sort of global context rather than only in a national context. And we could help prescribe really the standards or evolve the standards for a lot of these things. So that is one opportunity which I think we should not miss. And I'm sure that there is a a group working somewhere in the ministry which is looking at this. The second, I think, is one of really capacity building and capacity creation. I think Mukund touched upon this briefly, but I know for a fact that the talent is very short in this. I think there is a need in various universities to build a large pool of ESG fluent engineers, lawyers, policymakers, whatever it is. So that's the second opportunity, both from an education point of view as well as in terms of creating impact. And here is where I think India is important because of the size of not only of our population but such a large proportion of STEM talent. This is relatively easy to do. And I think the third opportunity really is kind of newer ideas. For example, carbon trading. Today there is no framework for it. So there is just stuff that is ready to be invented in India. Whether it's green finance, social stock exchange, which is kind of beginning now, but we need to get it right because all the other countries who have tried it have failed. But we are number 15, but we can still get it right. So there is this horizon of doing some new things and also doing some of the old things better.
Cyril, thank you. With that, I would suggest we pause here. We could go on for at least another couple of hours. The time we've had has just flown by. Thank you very much, Cyril, Mukund, and Nirban, for sharing your deep insights and your thoughts on this extremely exciting topic. One takeaway of many for me over the last hour has been that our next sustainability-linked unicorn is just 3 to 5 years away. So for those young disruptors, innovators, and scientists that are looking at creating disproportionate value, this is the place to be, ESG. Thank you. Thank you so much for tuning in to ET India Inc. Boardroom. Stay tuned for more.